Hey guys, Boris from Week Forex. Welcome to our Forex Daily Technicals for 7/25/13. We're next for FX. As always, trading foreign exchange or margin carries a high level risk and suitable for all investors. I ask you to read this disclaimer very carefully, understand all the risks associated with trading in Forex, and speak to a financial advisor if you have any questions or doubts. All right, let's take a look at the charts, which pretty much remain in the same place, although we're starting to hit some really key resistance points here that are very, very critical in order for us to clear in order for this thing to kind of break out. With the euro, the 32.25 got taken out, but the 32.50 kind of stymied the rally. We've had a consolidation date here. So far as 32 is holding, really so far as 31.50 holds, we remain in a positive bias, but we really need to take out the 32.50s with some conviction. We have IFO coming up today, so obviously that's going to have a big impact on the euro. We'll see if that's enough to carry us through that 32.50 level, perhaps higher into the 33s, maybe even 34s. That really basically a clear here opens up a run all the way out to 34s. But so far we haven't been able to clear this one last final barrier of 32.50, and that's been very, very sticky for the euro. The yen is also struggling the other way. The yen is struggling with the 101.50 level. We tried to breach it a couple times. We ran back again today towards 101.50, got rejected. So far, Asia rejected the 101.50. We'll have to see if U.S. can pick it up a little bit later. But despite the positive news out of the U.S., we just couldn't hold the levels and couldn't break through them. We need to take 101, 150 in order for us to kind of make a meaningful run towards the 101.50, which is the big near-term swing high operating here. And only if we can clear that does that open up the whole way towards the 103.50. So for now, the bias is definitely turning a little bit positive, but not enough to push us through the key levels. So 150 towards the 101.50 is the next big push for the bulls if they can make that happen. Aussie has gone sliding right back the other way and looks relatively ugly right now. We're trading 45s. Obviously, we ended up near the lows of the day. Very bad data out of China has put a lot of pressure and concern that perhaps RBA is going to have to cut again. And Aussie is starting to slide back down towards the 90 level. So far, the 91 holds, but if we get pressure to the downside on the Aussie, 91 is definitely going to be the next big test to the downside. As far as 93, that remains just a cement ceiling for the Aussie for the time being. And we really need a change of sentiment. We really need basically a reassurance that the Australian economy remains on track, that RBA is not going to cut any rates any further, and that for now, at least the monetary policy remains neutral. If that's the case, then you get more of a pickup. If that's not the case, you get further deterioration to the downside as there's more liquidation out of Aussie. And cable is kind of just really marking its time. It's holding steady. Let me just pull up cable here. Just bear with me. It stalled out at 54s, but it's still holding the 53s, and it's kind of just marking time. Sort of very similar to euro, but just in a little bit of a weaker mode. But overall, it definitely cleared this 53, so we are floating above here. But if this turns out to be a fake breakout, then a dip all the way up to 52s would kind of confirm that. So we have to watch that very carefully. So we're at a precipice of some very, very key levels here in FX. It's going to be critical for us tonight to see if we can break up to the top side on a lot of them. If we can't, if we start turning back down, we may have set near-term highs for a lot of these pairs into the late summer months. So that's pretty much how it shapes up for today. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg from BK Forex over now.